Now, the odds of a U.S. recession by year-end are climbing as Wall Street cites escalating trade tensions, especially with President Trump's tariffs. The latest data shows the U.S. economy contracted for the first time in 3 years, signaling a slowdown. Private employers added fewer jobs than expected, and consumer confidence dropped in April as uncertainty surrounding trade policies pushed inflation expectations higher. Economists warn that the real impact could come sooner than anticipated, especially if prolonged tariff uncertainty continues to erode business confidence. Job openings have already fallen to their lowest level in nearly 4 years, signaling a cooling labor market. Despite a historically low unemployment rate, early signs of stress are emerging in the labor market. Layoffs are on the rise, with companies like Meta, the UPS and Chevron announcing job cuts. While jobless claims remain below the critical 300,000 threshold, economists know that cracks are beginning to show in smaller indicators. The uncertainty surrounding tariffs is weighing heavily on business sentiment, with companies hesitant to make permanent changes like layoffs, fearing that trade tensions may subside. However, if tariffs persist or consumer demand weakens, labor market deterioration could accelerate. The global economic outlook has shifted significantly, with economists now predicting a higher risk of recession. While tariffs have brought short-term relief to some industries, they've created long-term inflationary pressures, complicating central banks' efforts to control inflation. Data from central banks around the world shows that over 65% are not expected to meet their inflation targets, and global growth forecasts have been revised downward. The risk of stagflation, where inflation and unemployment rise simultaneously, is now a significant concern. Economists warn the damage caused by these trade policies may take years to reverse. For latest news, download the WION app and subscribe to our YouTube channel.